When the stock market takes a sudden turn for the worse, a lot of investors panic. Dryden Pence gets out the shopping cart. I'm Jack Otter, editor of Barrons.com. I'm here with Dryden Pence, the Chief Investment Officer and co-founder of Pence Wealth Management. So first of all, Dryden, tell us about your philosophy, what you do when what people like you call volatility and everybody else calls, oh my God, the market's falling.
Well, we actually think that one of the principles of our firm is that cash flow trumps volatility. So if you build portfolios that generate a lot of net positive cash flow, you always have 3 or 4 or 5 or maybe even 10% cash sitting there ready to go, so that when the market takes these unexpected dips or something happens, you've really got dry powder. So we kind of say keep calm, buy on the dips, because it really allows you to take advantage of those moments. I mean, don't you just hate it when something goes on sale, you've been waiting to buy it, and that's the very day you don't have money? Well, if you follow cash flow trumps volatility, you've got dry powder, you buy on the dip, and you're able to get a price of a stock that you've been wanting to own for a long time at a very good value.
And based on the past few years' history, you think there's a decent likelihood that we could have one of those opportunities coming up in the near future?
Exactly. If you look at the last several years, we've seen volatility. I mean, volatility is going to stay with us. So what we've seen, two things happen. First of all, the amplitude of volatility has gone down, but the frequency has gone up. And every year for the last several years, in April, you've had this 4% to 5% correction that occurs as everybody finally has to get liquid to pay their tax bill. So we're kind of sitting back. We're at about 10 to 15% cash right now. We're sitting back ready for those opportunities, because a lot of times the market will move and you get a freak out, right? Everybody's selling because it's an ETF or because whether it's an ETF or a program trade, the market creates this volatility and everybody just throws the baby out with the bathwater. Well, we want to catch the baby.
So your approach is, rather than going in and just buying the market in that dip, you're looking for individual securities that maybe have even fallen farther than the market that you think are good stocks to buy.
Exactly. Because of the market move, this volatility takes really good companies down with it sometimes. And so when it does, then we get a bargain. So it really only works if you do this at the individual company level. So we're patient, we wait for something to go on sale, and then we buy it.
So what's on your shopping list now looking for that opportunity?
Well, there's a lot of companies that are a little high right now, but we think as this upcoming dip that we expect will occur, some of them are going to go on sale. So, I mean, we like the standards with Apple, Disney, Starbucks, Boeing, GE, all of those. Disney really presents a very attractive opportunity. Although it's up a little bit now, we think if it goes through this drop that we expect, gets drawn down with the market, that it's going to go on sale, and that's one that we're particularly interested in. It's a special kind of company.
What is it that appeals to you about Disney?
We believe that human behavior drives consumption, and that's really driven by people fulfilling their fundamental needs. So after you get past fulfilling your need for safety and security, people want to fulfill their need for love and belonging. And with oil prices down, cash in pocketbooks up a little bit, people are going to actually take their children on that vacation that they've been putting off for a couple of years. And everybody knows, if you go to Disney, at some point, sooner or later during that day, your child's going to look up at you and go, "I love you, Daddy," and that makes it all worthwhile. So we think theme parks and Disney are going to have a great summer, and we want to be there to take advantage of that.
Dryden Pence, thanks very much.
You bet. Thank you.